It's your August mortgage and real estate update. Okay, so let's talk about what's going on. Rates, I mean, it's the same thing, right? Like, it's going to be a volatile year. It's going to be up. It's going to be down. It's going to be all around. It's going to feel like a lot of pain. It is what it is. Let's move past that. If you guys want to watch what's going on with rates, I suggest the website mortgagenewsdaily.com. They've got really great articles. They pull from all over the web, and they also have, you know, a chart of kind of where everyone in the country is with rates. That's rates, okay? Are we seeing a housing crash? No. Like, seriously, can some of my friends in New Jersey drop in? We're still seeing a lot of competition in a lot of parts of the country, like a really good amount. You know, there are some people that watch far too many YouTubers who do clickbait videos about a crash coming, and they say that every day, oh, it's in 6 months. Oh, it's in 6 months. Guys, we don't have enough supply for a crash. It's that simple. Like, if we had a ton of supply and a smaller demand, okay, but we don't have enough supply. There's none on the horizon. You know, there's millions of Americans with 2 and 3% rates that are never going to sell those houses, and they're never going to move. Or if they do move, they're going to turn that house into a rental because they're never going to want to give up that rate. Okay. So you're not going to have the same level of houses trading on the open market. Very important that you guys recognize this. If for some reason interest rates dropped, okay, like if interest rates drop to the 5s, it's going to be 2021 all over again. I have said that in prior videos. I will not bore you. Today, I want to talk to you about something you need to be very cognizant of, whether you're a first-time home buyer or you're a homeowner. So I'm going to tell you what's keeping me awake at night and why you should be concerned and what you should prepare for. Okay, I always tell people, do not max qualify. And I'm going to say it again. If you're looking at buying a house and a lender says, the max I can get you, no, you want to be under the max. You need to know what your debt to income is. If you're unfamiliar with what debt to income is, search my channel. I've done multiple videos on it, okay? You do not want to be anywhere near your max. Here's why. Homeowners insurance. Guys, we've seen homeowners insurance go up so much in the last few years. And of course, like, think about these insurers, think about all the tragedies, think about all the drama in Florida, the fires in California, the flooding everywhere else, right? Like, every time I turn on the news, some state is flooding, right? And it's costing them a fortune. And we're seeing premiums go up because of that. Here's the thing though. The premiums aren't going to stop going up. We're seeing in certain states that insurers are pulling out, which means there's less competition for the buyer's business. Whenever you have buyers only having 1 or 2 choices instead of 10, the prices go up. And they're going up because the areas are considered more risky, okay? And you may be like, oh, well, Jen, I'm in like a safe part of the country. There's no climate change here. Yeah, guess what, guys? You kind of get stuck with the bill for the rest of the country as well. Sorry, it's true. But look, I've been talking to a lot of experts in the homeowners insurance field, and they're saying, depending on where you live, expect premiums to go up 20 to 40% over the next 2 years. Whew. Yeah. You know, and you may be like, oh, I've got a great policy. Cool. They can totally increase it, guys. You know, there's certain parts of the country where if they think your roof's too old, they're just dropping you. You know, there are parts of California, people just got dropped because of their zip code. You know, that happens every year. And then they have to get new insurance, and the new insurance is more expensive. So the reason this ties in with debt to income is because if you guys are buying a house and you're max qualified and your insurance goes up the next year, you're going to have a really tough time paying for it. And sometimes people go, oh God, I can't pay for the insurance. I just won't get it, or I'll just stop paying for it. You can't. So if you have a mortgage, what's going to happen is the lender is going to slap insurance on your property. And of course they are. It's their investment as well. They're the ones that lent the money. They want to make sure if it burns down that they don't just get stuck losing a truckload of money. So lenders have the right to stick an insurance policy on your property if you can't prove that the property is insured. So not paying for insurance is not an option. Yeah. So what I would be suggesting right now is if you're qualifying to buy a house, do not go to your max. If you're currently in a house, you know, I would start saving. See if you can start saving an extra $100 a month. If you're in Florida or California, start saving an extra $200, $300 a month, so that when those premiums go up, you know you can afford it and you're used to making the payment. Okay. I know it sounds alarmist, but the more you guys dig into this, the more you'll go, oh, Shoot. Jen might be right on this one. And here's the thing. Let's say you already own a house and you're saving an extra $100 or $200 or $300 a month because you're like, she could be right. The worst thing that happens, let's say I'm wrong and the premiums don't jump up. The worst thing that's going to happen is you guys have a savings. Maybe you go on a vacation. Maybe you just keep on building that savings, which is always a good idea, but I just don't want any of you guys in a position where you're about to lose your home because of the insurance costs going up. So really be mindful, guys. The stuff happening with homeowners insurance right now across the country, I've been doing this for 15 years. This is the first time I've ever done a video like this. So really be aware. If you see local legislation, state legislation that's trying to make it so that insurance is available, pay attention to that, because I think we will be moving towards potentially in many states where the state or the government is backing our insurance. So scary times indeed. I'm sorry this was a little bit of a depressing August mortgage update. But at the same point, I hope it helps at least one person. I hope it helps the person who's getting qualified say, hey, I don't want to max out, because if that insurance goes up, they want to be able to afford to pay it and still have a nice quality of life. I hope it helps a couple homeowners who already own houses and they start stacking some cash just in case. And then if it happens, they're prepared. And if it doesn't happen, they've got savings. So that's a win-win. Anyways, as always, if you guys have questions or you need to get approved for a mortgage, I am licensed in 48 states to help you, and I would love to help you. So please reach out. Thanks for watching, guys.